I want to thank everybody for joining us today for another HKA monthly webinar series. We're going to present succession planning today, and we're going to get into several key instances of what succession planning really means. But to start, I want to introduce Jamie Thomas and Catherine Kruse are both also on the line here with us. So if you have a question, don't hesitate to use that chat function to reach out, ask questions. Throughout the webinar. Should be about 45 minutes, maybe a little less depending on questions. But do reach out to them if you want a copy of the slides. They'll make them available as well. Today, succession planning is the last in our line of the building blocks of planning. Okay, so we started with knowing your why, then setting up goals, understanding budgeting, especially key budgeting, performance budgeting. And then how that September one was about how do KPIs impact budgeting and drive profitability and expectations. The last one last month is the dashboard, being able to set up your financial system so that from a transparent perspective, you can easily see where you are. And that allows you to make decisions a little more quickly. The last one today is our succession planning. And what is succession planning? What does it deal with? In November, we'll have kind of a roundtable roundup kind of thing where we'll talk about everything and bringing it all together. And at the end of this, I'll talk about one of the webinar series we have coming up. It's a 6-part series. Jordan Coolingle, a limited partner here at HKA, is going to be hosting. I'm really excited about it as well, but I'll tell you a little bit about it here at the end. Catherine, any questions, anything you think I need to touch on before we get started?
Nope. As always, if you have any questions or if there's anything you do want to talk about, you can send me a chat or you can click on the question and answer button on the bottom. And we are recording the webinar if anybody needs to go back and would like to see it again.
All righty. Okay, so building blocks of planning, succession, that's this month. So the key components of succession planning, and this is kind of an interesting thing, when we think about succession planning, sometimes we get a little bit too deep in the weeds. In general, succession planning is really fairly simple. There are 2 viewpoints of a succession plan. There's a business view and there's the owner view. Obviously, the owner view, the chicken and the egg, right? We have to make sure the owner view is complete before we even have a chance at getting our business view right-sized. But we'll talk a little bit about both of them here in this segue. There's a whole lot more information to talk about, but we're going to focus here on really the big picture. So the business view, there's an inside business view and an outside business view. And the inside business view kind of goes around, well, what are the processes? Are they transferable? Is management centralized? Is management decentralized? Is ownership key and irreplaceable anywhere from an inside business view? Or does ownership just play a very key role in that business view? Now, what is a key role? So I could have Bill Kruse plays a key role at HKA, but the key role that Bill Kruse plays, where we hope we are and where we're going, is someone that can be replaced, something that can be trained into, but isn't something that is irreplaceable. And those are very key factors in determining the value of the business. And we'll talk about that a little bit later when we talk about enterprise value. But how is that business? That's that inside view. How are we working internally? If we are efficient, how are things connecting? Can I easily run reports? Can I easily communicate with different team members? Or in the case of larger businesses, different divisions? How do those divisions run themselves? So that's that inside view. Is it really working well? Kind of that easily swinging pendulum back and forth kind of thing. And if our business view on the inside is working well, then from the outside, there's a decent chance that my peer ratings, my EBITDA scores, and that my key leadership within the industry is also working well. So business view of your business from the inside, is it all working? Do I have a process manual? Are the divisions or the key employees, are they all speaking with each other in speaking terms? Are we centralized from a management or key role perspective, and is it transferable? So that's your business view. The owner view, most people, honestly, aren't ready for this part. We spend a lot of time in our businesses generating revenue and eliminating costs and doing all this stuff. But the reason that most businesses close instead of selling is this next piece, the owner view. Clearly the most important aspect of any kind of succession. And when I say succession, that means I'm selling it, I'm transferring it to my family members, I'm transferring it to another key team member, and I'm going to continue to run it or have it run for me. We call that mailbox money. But that's what succession includes, all those things. How the owner's view works into this is the most critical function. So we have two different types of owner views. We have the activity view, and we have the financial or estate view. Many people focus on that second one. Once again, the financial or estate view. Oh, I just got a brand new estate plan. Oh, I'm ready to sell my business. No, you're not. You just got a brand new estate plan. How does the estate plan fit into a business sale? And I'll talk about that in a minute. But I want to talk about the most difficult one. That's the activity view, the owner's activity. What am I going to do next? Jack Welch's wife is famous for having said, I married Jack for life, but not for lunch. Now, what that meant was that I want Jack in my life forever, but I really don't want him at home for lunch every day. He needs to go find something else to do, right? And that's what that means. What is the owner going to do next? Now, we'll talk a little bit more about that, but that can be part-time, full-time, transitory, whatever it is, but it's really important for an owner to think about what they're going to do next. The fact of the matter is, at HKA, I've spent a lot of my life building this business, hoping to transfer those skills to the next generation, to other key team members, so that then I can go do something else, right? And we want us all to be able to do something else. But if your whole life is wrapped up in the business, it's almost impossible to do any kind of transition, because from a mental perspective, and the human condition is, this is what I do every morning. No one else can do this. And when I'm in that trap, it's really difficult to get your business ready. Remember, business view, owner view. If the owner view isn't ready, then the business can't sell. So what am I doing next? If you talk to an owner and they say, I could never sell this business for these reasons, if you listen to them, they may be telling you stumbling blocks that we need to find a way to get over. Or they may be telling you that they really truly can't sell the business because there's a mental hurdle about what else they would do next. What do they have personal value in doing next? Sometimes it's hard for us to replace ourselves enough, but replacing ourselves within our own mind is maybe the biggest stumbling block. So that's the activity part of the owner view. The financial or estate aspect of the owner view really kind of comes down to, am I financially prepared to sell? Okay. What structures do I need in place to sell and then fund those structures? And the last one is that estate plan. What happens if I'm still living, if I still own the business when I die? What happens if I have sold the business when I die? So making sure that our estate plan is malleable enough to adapt for either one is critically important. So those are the owner views: activity, financial, and estate. One of the things that we have to do is make sure that our owners truly have a financial advisor. It's critical. I have a lot of clients, their wealth has been wrapped up in something very illiquid. That's their business. So getting to know, and they haven't really on their perspective, they haven't really felt like, well, I've got a retirement plan, but nobody really wants to bother with me. I have no money. It's all wrapped up in the business. Now it's time to start creating that relationship so that you can see and model. That helps with, number one, the activity piece. Can I see and model where I'm going to be if I choose to sell, transition, succeed, whatever that works? So those are the two key components with succession: the business view and the owner view. Let's talk a little bit more about them. So now let's talk a little bit about, let's get into the business view. So the business view is going to revolve around, how is the business working? How do I measure myself against peer? Okay, my other peers in the business. Now, understanding how our business is compared to other business There's a thing called the NICS code. However, you look at your tax return, the NICS code is on your tax return. You want to go look at that NICS code because that's how most databases that we use, and we used one called ProfitSense, most databases key off of your NICS code. So if you're filing a tax return under the wrong NICS code, it's a little bit of a big deal for two reasons. The first one is, remember when the IRS is looking at your tax return, they're comparing you to everybody else in that NICS code. If you're in the wrong NICS code, you may not be comparable. And therefore, because of that non-comparability, you may be getting an uninvited call from the IRS because they don't understand why you don't compare with everybody else. Believe it or not, in the big picture of things, in the really big picture of things, most businesses within different industries, most businesses operate in the same manage, have the same financial statement ratios and those kinds of things. So making sure that we've got the right NICS codes is a big deal from a tax return perspective. But it's also how most of us in the industry, we have these proprietary data sets. ProfitSense, once again, is the one that we use. And when you're looking at ProfitSense, if my small business I'm comparing it with all other businesses is in the wrong NICS code, I'm comparing it with the wrong businesses. So we want to make sure that we measure ourselves from a peer perspective. The number one thing there is our NICS code right? Now, HK, we are ready to help you with this across this whole spectrum. How do we help here? When we measure ourselves from a peer perspective, we have to bring our financial data into some sort of set, okay? Transfer it into some tool like a ProfitSense so that we can download then other outside information to compare you with. And so what we use is peer ProfitSense, but it enables us to very easily move your accounts receivable upside and downside. What's my EBITDA running? And compare your business on many different levels with other businesses in this region or in the country. So peer goals, it's a great way to look at your business. Now, people will a lot of times not do this piece, okay? So I understand that this can be kind of an elevated aspect of building your business. But if you really want to be the best, you have to measure yourself against the best. And that's an ongoing truth, whether it's personally or in a business perspective. If you don't know who the fastest runner is, then you're never going to be as fast as you could be. The argument always goes, run with faster men. That's what it says. Run with faster men, run with better people. So measure yourself against the best in the business, and your peers will help lift you up just by the sheer point that you're starting to look at yourself from their perspective. Now, how do I get there? We've talked about this a lot, and I believe that today in 2021, KPIs at the cusp of the post-COVID system, series, right? So we were pre-COVID, then we were COVID, now we're post-COVID. And I understand that we're still within the pandemic, but in where we are today from a business perspective is the challenges of business, because we very quickly went from bricks and mortar to remote. We're very quickly upticking all of our accounting systems, all of our transparency, everything we use. So we're very quickly being able to measure ourselves electronically. We have to be, because a lot of our teammates are working from home. So we have to be able to use the technology that's in front of us. KPIs, key performance indicators, will continue to drive our ability to hit our peer goals. Now remember, the key performance indicator, or KPI, is the thing that caused revenue to raise. It's not the act of raising revenue. An increase in revenue is the result of a KPI, okay? Now, how do I get those peer goals? So my peer goals may be things like average inventory turns, okay? That's a very popular one in the manufacturing sense. Other ones may just be in the space of franchises, maybe, well, in the haircut business, it's how many haircuts did I turn in a day? Those are KPIs. Those are many times non-financial indicators that will, if they are moving in the right direction, will then dictate or tell us what we're going to see from our financial statement books later on down the road. So KPIs feed into those peer goals. But so understanding KPIs and our proficiency with KPIs are going to enhance that business view. The next thing, accounting transparency. So I can have the best KPIs in the world that are going to drive me to be the best of the peer class. If I can't run the report, if I can't see that information on a daily, quickly, monthly basis, however it is, however I want to see it, but see it very quickly, then my ability to achieve those goals is going to be greatly reduced. And from a business perspective, the outside or the inside looking out is going to drive the business valuation down if my accounting systems aren't working together properly to give me the information I need to run this business. So accounting transparency is today more important than it's ever been. It's always been important, but what we're going to continue to see is small businesses, especially, working with accounting transparency for a couple of reasons. Not the least of which is we're very technologically savvy now. We've had to be. Our team is now working from home, okay? So we're taking a couple of leaps in here. The second thing is, in order to truly compete in the next generational cycle of businesses, I have to be able to move quickly. And without the right transparency, I won't be able to do that. So accounting transparency will enhance the business view and therefore drive my value higher. The last one I want to talk about here is something that is grossly overlooked, and it is the internal processes, their efficiency, and then the documentation of those processes. Now, when we think of documentation, I'm not talking about a big book or something, but it is a manual. Okay, we call it a manual, but it's online. It's somewhere where the entire team can get access with it. This morning, Catherine was walking through at HKA. We continue to think about how is our client using our product? How is the client thinking of us? So we started talking about, well, we have a platinum level of service. And at the platinum level of service, Bill Kruse is acting as somewhat as your CFO. We're having ongoing meetings. We're talking about advanced cash flow techniques. We're talking about a whole lot of things at the end of each month. We're walking through your balance sheet and your income statement and gaining some insight to how things are going throughout the month instead of just at the end of the month, right? So that's that platinum level of service. Well, that requires processing efficiency and manuals. What is that? We know now what it is, so we can view those documents. And it's important for our entire team to know those documents, to know what it is. So if I am valuing a business and I don't have anything written down in air quotes, then I'm going to value it less, because when I come in, the people that are there may abandon ship. So it's very important and very much overlooked. So processes, that's your manuals. Now, what does efficiency mean? Efficiency ties a little bit into the accounting transparency piece. So in an overly simplified method, if I use a point of sale system and that point of sale system doesn't somehow connect key data things into my accounting system, well, that's not efficient. It's not efficient at all. And we all know that, right? But we've not done a great job in making sure they do connect. Most accounting systems, they go get our bank data, they go get our credit card data, and they're not reconciling between what the sales POS system is telling me every day. Okay, so in its simplest fashion is how efficient is my technology working between each other and allowing me to truly see real time how things are going. So those are your business view components. Kind of a nuts. We're still at probably 30,000 feet, but we want to focus on peer goals, KPIs, transparency of that reporting function, and then finally that efficiency and the ability in those manuals so that team members can train across different levels so that we can all be on the same page. If I increase those things and make them good, then I'm going to increase the value of the business and therefore the ability for me to succeed in a succession plan. Remember, succession isn't just selling, it's also transitioning the business to the next generation. So that's our business view, some of the key components that we get a little granular. Now, before I go into the owner view, Catherine, any questions that are popping up just yet that I need to be aware of?
Not currently, but the chat is always open.
All right, terrific. So we'll keep plowing through here. We're at 17 minutes in. We're doing really well. Key components, the owner view. Now, once again, I'm hitting that first one, right? Activities. What is the owner going to do next? Now, the fact of the matter is, it's probably difficult for anybody working inside the business to go to the boss and say, hey, man, Have you thought about doing something other than working all night so that when you finally leave, you'll have something else to do? I mean, that's a difficult conversation, right? That's when it's great to have HKA in there because, the HKA team is used to having those difficult conversations. Not that we make them difficult, but we're not bashful in asking the question, what do you do when you're for your fun life? What do you see yourself doing next? What do you want to devote your time to next? What does version 2 of Bill Kruse look like? Those are things that need to be focused on. So as we look at the overall value of the business, activities of the owner are actually about the success factor, right? Because if the owner isn't comfortable with what they're doing next, the likelihood of success for the transition is much smaller. You don't want to be in the position where the owner keeps showing up well after the time, and then what happens is there's maybe there's another full-throated cry in the wilderness that we really just don't need to pay attention to. But we want to make sure that the owner's got some activities planned for their next one. So the financial plan, you can see some very, very familiar things here. This is something that HK does a lot of, quite frankly, is we like to help our clients blueprint what that financial plan looks like. So lifestyle, what's going on now? What kind of cash flow do I need to live now? Going back to the business piece, peer goals, KPIs, accounting transparency. By implementing these elements, we will drive higher industry best after-tax cash flow. If we drive after-tax cash flow with other elements, it allows us to generate the highest transition plan. And more importantly, if we're doing that, then it's the best business plan because we're having fun and we're making money as we go. We're not necessarily just thinking about selling, right? We're transitioning. But lifestyle now, how am I paying for it now? So that financial planning with that key financial advisor is how am I making this work right now? Okay. Running some numbers, making sure that I'm saving, making sure that I'm maxing out the retirement plan. That's the next one, right? Do I have the right retirement plan in my business? So a lot of times we spend time focusing on the type of retirement plan, the quality of the retirement plan, and the cost, air quotes, cost of the retirement plan. From our perspective, what we try to help people understand is the cost of the retirement plan isn't really the true cost. Okay, in order for me to have a 401k, I have to pay this much money a month. Yeah, that's a cost. I understand that. But the real cost of a retirement plan is how much money do I have to give to everybody else in order for me to get what I want? Because this is from the owner's view, okay? Now, there are two elements of that cost, right? There's the upside and the downside. The downside is your retirement plan is terrible. Nobody wants to come work with you because they can't put enough money away. That's not a good retirement plan, okay? We want to enhance that so that when we're in the marketplace, especially today, okay, we're seeing a lot of wage inflation out there. Why? Because our teammates are able to easily move from job to job. Why? Because we're not constrained by a parking space anymore. We're no longer constrained by a parking space. So in order to attract the very best teammate, you need a really good retirement plan. So that may be a cost, but it's a cost of doing business. It's not a detrimental cost. It's a positive cost, okay? We also want to make sure that it enables each of us to participate as much as we can, okay? So yes, the employer match is a thing, but when you think about it, you're empowering your team to be independent, and that's not a bad thing. The more independence they feel from you, the more empowered they feel from you, you would think the more loyal they're going to be to you as you continue to move through the life cycle of your business. So lifestyle now, retirement later, but also how it hits with my teammates. And the last thing is the estate plan. Now, this is what most people focus on, is that estate plan. And I have a lot of fun with these. And at HK, most all of us, Jordan and I especially, but most of us are pretty good at helping people understand at least how their estate should work. And then what I do a whole lot of is helping them blueprint that estate. So what does the plan work? How does it fit hand in glove with the rest of the things in your life to ensure that everything's taken care of when you need it taken care of? And not just for the 30 years away from today, but tomorrow, the next day, the next day. And that is a normal flaw in estate plans that we see today, is that it's, well, if you live until you're supposed to die, Yeah, but what if I don't? How does it, is it working if I don't? And that's one of the things that we do at HK is make sure that the blueprint covers every year, day, hour, etc., from today until the end of time. So that's your financial plan. Those are important for the owner view. Now, once again, is this going to drive the value of the business? No. A little, yes. Not significantly, but a little, yes, because too often owners tend to run their business. Why? For what? Lifestyle now. Okay, so as we rethink lifestyle now and think more in a bigger plan, it's going to improve the internal view of the business and therefore how the business is looked on the outside. So this will definitely, the financial plan is definitely going to help with our business valuation. But once again, everything on this page is about the success of a transition. Okay, so participation. Most people think of a succession plan as I'm here today, I'm gone tomorrow. The fact of the matter is, especially in the small business context, most small businesses sell, and there's a 1 to 3 year requirement of the ownership to continue to work for the company. Now, they structure it as a consulting plan, or they say, if you do X, Y, and Z, we continue to keep you on for your health insurance, or health insurance may just be a thing, a part of the transition. But the participation of the owner helps him attack number one, which is activities, right? So there can be a part-time position. There could be a transition position. And what transition normally means is, here's your top 10 clients. When those top 10 clients all sign new contracts, you don't have to work for us anymore. But until they do, you have to continue to transition that relationship into the new team, the new management. And then, of course, there's full-time. More and more, because of the impact of an entrepreneurial lifestyle on family, we're seeing more and more small business men and women sell their business or merge it with somebody else and just go back to being an employee. The risks and rewards of small business are pretty heady, so you have to weigh them. But we do see a whole lot of transitions where the owner is just moving back to being full-time and being somebody's employee, because you can see there's kind of a relaxation. You're not in charge of anything anymore. You have a job to do. There's a really good chance you're going to do a really good job at that job, and then you get paid a paycheck, and then you can go home at night, right? So each one of these elements will assist us in evaluating the owner view, which then obviously impacts, maybe not directly, but definite indirect impact on the business view, which drives valuation. These are the things that I want you to think of when you think about succession or sale. Most owners focus on generating income. That's just a fact. We're driven by income. And some businesses will focus on either income or expenses, right? But they're missing the key thing. And the key thing is, how does it all work together? That's called enterprise value. Okay, what is the total value of the business? Let's go back up here. Right here, there's an inside and outside business view, okay? The inside business view is, how's it working? Is the pendulum swinging, or is it stopping? Is it starting? Is it kind of working or kind of not working? How is it working? How do we look on the outside? Are we peer related? Can we drive value because we're in the top of the peer? Each one of those are going to mess with our overall enterprise view. Now, this is part of how we drive enterprise view. Peer goals. Are we measuring ourselves against our peer? Are we driving KPIs to hit peer goals? Is our accounting transparency allowing us to even see our KPIs, etc.? So when we look at this wordage right here, the enterprise value is equal to the total value of the business and drives a multiple. So let's say I earn $1 million. And from a peer perspective, that means I'm going to sell at 3 times that $1 million. So I'm going to sell for $3 million. That's awesome. I made $1 million that year. That's terrific. Well, what if I could make $1.5 million a year? Now, relative. So I make $1.5 million a year. That's $500,000 more than what I made in the prior year. Okay, that $500,000 I can drive that back into the business to get more generation, more value out of the practice. Well, let's say at $1.5 million, I actually can sell at a 6-time multiple. That's a different number. So not only am I making more money every year, I also more than doubled I tripled, in fact, my sale price just by increasing my income during the year, which just continues to benefit me in the business. And that's why we say this last thing. The best business plan is a formed exit plan, not a well-formed, a formed exit plan. Let's just get started about having a conversation about what an exit plan looks like. So this is succession and sale. This is how we should look at it. We should look at it in the concept of it's not just as easy as getting somebody to write a check. It's bigger than that. It's about thinking about it through all the processes, internally, externally, ownership, business inside, business outside, and ownership. What am I doing? Am I really ready to help us drive the value throughout the entire business? Catherine, as I kind of wrap up, if there are any other questions, but I'm going to say that this is what I really wanted to bring up as well is in November, Jordan Cooling is going to start this 6-week intensive starting with choosing your entity. There's a lot of stuff out there, folks, on choosing your business entity. Okay, there's a ton of stuff. Jordan's going to take you through each part of it. So this is workbook stuff. This is about, homework, get it together, see how it works, what doesn't work. So it's really down in the grit of running your business. And I think you'll really enjoy it. Catherine, any questions as we go to wrap this up?
Nope, we don't have any questions. I would just say with regard to Jordan's new webinar series, we're really opening it up to anyone that has a business, but it can be especially helpful with people who are really just starting their businesses or trying to figure out where they should be going. So we'll be talking about choosing the entity, setting up a set of books, recommended softwares, and best practices for day-to-day operations. So if you want a refresher course, or if you know someone who's just started a business that you think this could be helpful for, it's a webinar that will have 6 weeks in a row, take you step by step through each part of the process. And I'm happy to answer questions along the way as well.
Awesome. Terrific. Well, I want to thank everybody once again for joining us today. Hopefully you got some good out of this. HK wants to help you with this. We love talking about succession. We love talking about the internal processes, the meat of your business. How well is it running? We've got terrific team members who understand the connection of your accounting processes. Oh, you're using this POS system. How should we pull non-financial data? All that stuff is very passionate here at HK. So we'd love to help you. If you have questions, don't hesitate to give us a call. Otherwise, until we meet again, stay salty.